Good morning, students. I, Mansi Trivedi, is going to take your Auditing and Corporate Governance in BCom Sem 5. In this particular subject, we are going to deal with 4 different units. The 3 units of auditing and single unit of corporate governance. Okay. Today we are going to discuss the syllabus of unit number 1. The name of the unit is Introduction to Auditing, in which we are going to learn introduction, meaning, objectives, importance, scope and functions, basic principles and techniques, types or classifications of audit, limitations of auditing, audit planning, preparation, audit program and audit note, EDP audit environment and control, audit trail, that is computer aided audit program. Now this is the syllabus of your unit number 1. Now in a single unit, that is in unit number 1, you are going to deal with 4 different chapters. Yes, make sure there are 4 chapters in a single unit. The first chapter, that is Introduction to Auditing. Second one, Objectives of Audit. Third one, Types of Audit. And fourth one, Organizing Audit Work. Now, in unit number 1, the first chapter that will start, that is Introduction to Auditing. Now in this Introduction to Auditing, we are going to learn introduction, definition, characteristic, scope, principles, difference, advantages and limitations. And the last one, accountancy, a necessity, while auditing a luxury. The first unit, that is about the introduction to audit. Now before starting the whole unit, I am going to give the introduction to or the basic meaning of audit or the basic meaning of auditing. Now as far as auditing is concerned, the simple meaning of auditing is an examinations of books of accounts. Okay. Now books of accounts is going to prepare by accountant and the work of auditing is going to perform by auditor. Auditor is a third person, or we can say that auditor is not the part of our organization. Each and every year we are going to appoint the outsiders, a qualified person who has an ability to do the work of audit. So auditor is not the part of our organization. Auditor is going to verify the whole books of accounts in a proper manner so that if any error or fraud is there in a books of accounts, then we can simply find it. Now, before move further, let's see what do you mean by books of accounts. Now many times we are going to hear this particular word, that is we are supposed to prepare books of accounts or auditor is going to check the books of accounts. Okay. Now books of accounts is nothing but a set of a proper accounts, that is journal entries, ledgers, trial balance, trading account, P&L account and balance sheet. Again I am going to repeat myself. Books of accounts includes journal entries, ledgers, trial balance, trading account, P&L account and balance sheet. Now the auditor means the third person is going to check the work of accountant. Now accountant is a part of your organization. So sometimes it's possible that by mistake he is going to make any error or any fraud, or sometimes it is possible that intentionally he is going to make any kind of mistakes or errors. Now the work of auditor is simply examine the books of accounts which is going to prepare by the accountant of a particular organization. Now auditing includes verification and valuations of the books of accounts. Okay. Now as far as the auditing work is concerned, the first task of any auditor is to see the verification of a particular books of accounts. It means checking the truthfulness of the accounts which is to be prepared by the accountant. And valuation means the amount which is going to entered by the accountant must match with the original data. Means there will be no malpractices as far as accountant is concerned. Sometimes it happens that the top committee of the organization, that is BOD, the board of directors, do not have much time to check each and every aspects of the organization or each and every department of the organization. So to overcome this limitation, the board of director is going to appoint auditor. On the behalf of them, the auditor is going to check the financial data as well as the accounting data of a particular organization. Okay, I think it is clear to each and every one the basic concept of auditing. Okay. Again I am going to repeat, auditing is nothing but the examinations of books of accounts which is prepared by the accountant of a particular organization. Now as far as during the examination, auditor is going to verify the books of accounts and valued the proper amount of different assets as well as liabilities. Okay. Now in this particular chapter, we are going to see the different characteristic of auditing, how the audit work is to be performed, and the basic advantages and limitations of a particular audit work. Then further, the name itself suggests the name of our subject, that is auditing and corporate governance. Now today we will see the basic meaning of corporate governance. Corporate governance deal with ethic part. It deal with our moral part. That how an organization is ethical. Now as far as corporate governance is concerned, here we are going to see the basic balance between economic and social goal. Each and every organization have their particular goals, and that goal, that is to maximize the profit. Second one, social goal. Okay, social goal is divided into two parts, the personal goal and society goal. Here personal goals means the goals of your employees, and the society goal, that goal is the goal of welfare. Now, any organization's objective is to maximize their profit. That is the primary goal. Now, first, when they maximize their profit, they move forward, and they move forward to maximize their wealth. Now, the second goal of any organization, that is the wealth maximization. Okay, again I am going to repeat myself. There are basically two goals of any organization. The first one, that is profit maximization, and the second one, that is wealth maximization. Profit maximization means to maximize your total earning or your total profit, and wealth maximization means to maximize the share value of your shareholders. Now, how you are able to maximize the share value of your shareholders? The answer is simple. That is by declaring dividend to them. When organization is going to declare a proper and regular dividend to their shareholders, they are able to create trust in the mind of shareholders. When the trust is created, organization is able to expand their whole business. And when the shareholders have a proper trust on the organization, they are going to have a long-term relationship with the particular company, and due to that long-term relationship, any organization is able to increase their goodwill. So ultimately, when company is able to create their goodwill, or when the company is increasing their goodwill, that will result into profit. So both goals are interrelated with each other. When profit is going to be there, you are going to share your profit with your shareholders. When your shareholders are satisfied, they are going to continue with your particular company. And when long-term relationships are there, they are able to create a goodwill, and that goodwill is converted into profit. So here, as far as corporate governance is concerned, we need to think about our shareholders, we need to think about our stakeholders. Now, there is a basic difference between shareholders and stakeholders. Shareholders means those persons who are going to invest in your organization by purchasing shares, and stakeholders are those persons who are directly or indirectly related with your organization, like your customers, like your dealers, like your debtors, like your creditors, like government, your competitors, the society itself. So, we need to think about our stakeholders. Here, at this point of time, we are not supposed to become selfish. Okay, we need to share the maximum part or the major part of our profit with the society. Okay. So, in corporate governance, we are going to learn a proper utilization of our resources in a different manner, so that we are able to satisfy the basic need of our company as well as our stakeholders. So, this is the introduction to your unit number 1 plus the introduction of the name of the subject itself, that is auditing and corporate governance. Now, again I am going to repeat, in your unit number 1, we are going to deal with 4 chapters, and from the next session we are going to start our chapter number 1, that is Introduction to Auditing. Hope this one is clear to each and everyone. Okay, thank you so much. Thank you.